In this week's markets update, a number of surprises in last night's ECB meeting propelled the US dollar to 3-month highs in global foreign exchange markets, and that added further pressure on an already weak Australian dollar. The US dollar was already on a stronger path ahead of the ECB meeting, helped by a heady cocktail of 7-month highs for US bond yields, increased optimism about Trump's tax package, and heightened speculation that Trump may pick hawk John Taylor as the next Fed chair. Last night's dovish taper from the ECB added fuel to the fire, and the US dollar is at 3-month highs and the euro at 3-month lows. Now, most had expected the ECB to announce a cut in its monthly asset purchase program from 60 billion euro per month to 30 billion, which it did. However, the market had also expected the ECB to confirm that the asset purchase program would end in September next year. However, the ECB failed to give any clarity on that point. Further, the ECB statement made it very clear that rates will remain at current levels for an extended period of time and well beyond the end of the asset purchase program. This saw the euro down sharply on foreign exchange markets, and we hit a 3-month low last night of 116.41. Now, the strong US dollar has added some weight to the sharp drop in the Aussie dollar this week, though, to be fair, domestic factors were a key driver for the 2% drop. Third quarter CPI was released on Wednesday and contained some important messages for financial markets, economists, and of course, the Reserve Bank of Australia. Now, forecasts were for a sharp 0.8 rise in headline inflation due to big rises in utility prices. However, inflation rose by 0.6 on the headline and 0.4 on the core. Thus, inflation remains mired below the bottom end of the RBA inflation target, and Westpac expects that the December reweighting of Q4 CPI could remove between 0.3 and 0.4% of headline inflation, suggesting Australia will remain in a low inflation trap. Not surprisingly, the Australian dollar fell sharply on the weaker than expected inflation outcome. It's down 2% on the week, and last night, and we hit a 3-month low of 76.53. It's likely that the strength in the US dollar will continue through next week too. Key will be who Trump picks as the next Fed chair, and that decision is due mid-next week at the latest. We also have a number of key central bank meetings around the world. The Bank of Japan on Tuesday, the Fed on Wednesday, and the Bank of England on Thursday. Now, of the three, the Bank of England will likely raise interest rates by 25 basis points, removing the emergency Brexit cut. We also have a heavy run of US data over the next week. That starts with advanced Q3 GDP this evening, which is expected to show the impact of weather in September. The run continues through next week and culminates in the October non-farm payroll report next Friday. Now, US data is likely to continue to strengthen into the end of the year, and with the Fed set to raise rates in December, it's likely that this period of US dollar strength will continue, and Westpac continues to expect the Australian dollar to continue to fall to 76 cents. These are all factors we can talk about in next week's markets update.